So if you're doing any business in this country, the United States, there will come a time where you'll have to have a conversation with our rich uncle. You see, whether you like it or not, we all have a silent partner in business. It's Uncle Sam, right? So in this video, I'm going to share with you the 4 things that they challenged me on regarding my income and expenses and my process of going through an audit. So this is my second audit, and I want you to know exactly what I went to so you can be prepared if the IRS calls you in for an audit. All right, let's go through this. Greetings, class. It's Kris Haskins with therealestateroundup.com. My mission and ministry is to raise your financial literacy through real estate investing and entrepreneurship. So today I wanted to share with you my experiences, the emotional times going through an IRS audit. I do not wish this on my worst enemy. Let me tell you how this thing starts. You get a packet in the mail, I'd say about a ½ inch thick, open it up. Kris Haskins, we want to see you down at the office 8:15 on March 3rd to meet with your IRS auditor. They give you the name, the phone number, you can give them a call. This is what we want to see, what years we want to see. It is not a pleasant experience. Now, being my second one, I know what that white envelope feels like when you get it in the mail. I do not wish that for you, but if it does happen to you, we're going to go over 4 things that they challenged me on to see if I was just being honest, being forthcoming with the numbers. And yes, I pay professionals to make sure that I'm keeping my books and records up to par. But things happen, and what I found out is single member LLCs get audited the most from the little research that I did. That's why I've decided to be an S-election now to pay myself a salary. Now we're paying every month, and I'm paying so much in taxes. I'm like, listen, you got me. I'm in the system now. You will have to pay taxes. So listen, look at this. Inc. magazine is saying that the IRS plans to audit more small businesses this year. Here's what you need to know. They're ramping up. They're ramping up, y'all. Federal Times is saying the IRS calls for more employees to bolster audit capabilities. Right? Bloomberg magazine is saying the IRS plans a 50% ramp up in audits of small businesses next year. That was an old article from last year. And next, CNBC is saying Biden's $80 billion plan to beef up IRS audits may target the wealthy and small business owners. Roundup, they're coming. They're coming. I want you to be prepared. Let me tell you how I think about business. Every transaction, every check, every expense, every income piece that I conduct in my business, I think about it as if someone is looking over my shoulder, right? I want to be able to prove everything we're doing. And these 4 things here that they challenged me on, I'm going to show you what I did to counteract that, right? To make sure that I have all my ducks in a row. So let's look at this first IDR. IDR, they call it that information document request. And this stuff is emotional when you're going through this. If you've never been, I don't want you to go. The federal building is kind of like being in the Matrix. You got a green building. There's no pictures inside. When you walk inside, you got dudes with assault rifles. You can't carry your phone in there. There's nothing pleasant, right? No plants. There's no windows. You walk in, it's just walls and doors. That's it. You go to a door, you walk down this long hallway like the Matrix. You got a door right there. It says be here 8:15. Knock on the door. Somebody magically appears. The auditors, they're back there. They are back there every day. And I will preface this by saying they were very friendly to me. What I learned was the IRS will give you every deduction as long as you can prove it, right? And I want you to be able to prove all your stuff too. We owe it to our families to write off as many taxes as legally possible, right? I don't want you out there paying a lot of taxes if you don't have to. So this first IDR, the main thing, number 1, the car and truck expenses. Car and truck expenses. For me, I do drive a truck, or SUV. Real estate investors, what I was claiming was like 30,000 miles for the year, right? And to the average individual, somebody driving 30,000 miles in a year might get a little suspicious, right? But we as real estate investors know 30,000 miles is not a lot of miles, right? When you're looking at 100 houses, perhaps in a week or two, right? We're just driving around, looking at house after house, house after house, house after house, right? So Schedule 1 car expenses, they wanted to see car receipts, inspection slips, or any other records to show total mileage driven for the year. Log books or other records verifying the business mileage. If you didn't keep a good log or other form of records for your business mileage, reconstruct the business use of the vehicle. Okay, so what I had to do, I had to prove to them that I was driving all these miles. So luckily, I take my car to the dealership for the oil change. So I had January, February oil change, November, December oil change. And you can see when I brought it in, it was X miles, 30,000 miles more. So for me, everything's kept on track with that. But further, I had to turn in a half-inch page report of every property that I went to go see. We're talking about, I can't even count them. 50 pages I turned in. This property, 123 Easy Street, 456 Main Street, 147 Brown Street, all these houses, right? So I had to keep a log. I'm recommending to you, the main thing is keep a log. Keep a log of all the houses that you go through and all the people you meet throughout the day. Because the IRS is going to want to see you travel here, boo, 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 boo. How did you rack up 30,000 miles, Mr. Haskins? Well, here we go. I went here, boo, 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 boo. Miles at mile after mile after mile. And where I live, it's spread out. We got Virginia Beach, you got Suffolk, Norfolk, Williamsburg, Newport News, Hampton, very spread out. So it isn't out of the realm of possibility that one could have 30,000 miles, right? And I had to prove that. And we did that. Okay. So that's one of the things, your car expense, if you are like me, you're not depreciate. I mean, you're not claiming the expenses, but you are actually deducting the miles driven. So you can either do one of the two. And I want to preface this by saying I'm not an accountant, I'm not an attorney, I'm not giving you any legal or professional or tax advice. Consult your own CPA. Please get your CPA. You got to have one. So expenses, have your log where you're driving to, and keep a track when you get your oil change so you know, look, this is what I drove here. This is how many miles the car had when I took it to get an oil change. This is how many miles the car had when we did the oil change at the end of the year, okay? And that log is going to really help you to determine where you traveled. And one note on the log, they allow one place away from your home. Say, for instance, like if I was doing a renovation, driving back and forth to that property, they consider driving to the property for the first time during the day. That's not necessarily a deduction because they feel like you have to go to work somewhere. So to go to that first property, you might not be able to deduct those miles. So the house that you go to after that first house is when your deductions would possibly start. So make sure you do your research on that stuff. Could be some scary times because I might go see my renovation, who knows, 3-4 times in a day, right? Okay, the next thing that they were actually challenging me on were the fees and contract labor. Fees and contract labor. Now, what does that mean? Fees is going to be my income. How am I getting paid? The first thing they want to see, how do you get paid? So real estate investors, we turn in our HUDs, but a lot of times you may not have all that stuff. So you might have rental property or assignment fees. So they look at your leases. They want to make sure that your income matches the lease. So make sure you can say, hey, this is where I made that money. And you can prove where it came from, right? So contract labor, big one. I'm going to show you how to stay out of trouble with this one. Please make sure I got to work this. Make sure you pay close attention here. Contract labor. There's something called a 1099. Let me read this. Commissions, fees, and contract labor. They want copies of all forms 1099 for commissions paid during the year, names, addresses, and social security numbers of individual recipients of commissions if forms 1099 were not used. Copies of contracts or other written agreements for contract labor. They want to know, can you prove that you had all these expenses when you paid people to do work for you? So let me tell you what some business owners do to try to inflate their expenses, because all business expenses are tax deductible, meaning you don't have to pay taxes on them. So they'll say, I paid Joe Blow $10,000. I paid Eddie over here $5,000. I paid Bill $4,000 and I paid Jimmy $2,000. So the IRS will say, okay, prove it. Well, I gave him cash. Well, if you can't prove that you paid these people, guess what? The IRS is going to say that you are going to have to claim that as income. You have to claim that as income, y'all. And further, what some businessmen will do is they will write a check to somebody for 10 grand. And then that person would turn around and give them 9 of it back. So the business owner would try to say, well, look, I paid him $10,000. That wasn't mine. That was an expense, right? So that's why, without exception, on any labor, anybody you hire at any time, make sure you get them to sign a W-9 or 1099, same document, stating that you paid them that money for a business expense. At the end of the year, that 1099 will go to the IRS, and the IRS will say, hey, look, Jimmy got that $10,000. Billy got that $5,000, right? Johnny got that $8,000, and it's out of your hands. It's out of your hands. And let me tell you how we do that. So some people get squeamish about giving us their social security number. Don't feel bad for asking. This is how big businesses run. You need to run your business just like the big guys do, right? So I have a clipboard right before I'm paying them every time before, and I'll attach the check right there to the side of the clipboard. I'll say, hey, Jimmy, give me what's your full name? Who we make this check out to? Boom. Mailing address, fill it out. Oh yeah, what's your social number? Would you mind signing that for me? And after they sign it, that's when we release the check. So I don't want you to feel uncomfortable for asking people for their social security numbers, because I don't want you holding the bag at the end of the year. Terrible feeling, having to claim $10,000, $20,000 that you know you paid out, but you can't prove it because you didn't get a 1099, right? The IRS is going to want to see. Anytime you pay somebody over $600, get a W-9 sign. The W-9, you can go right to the irs.gov, download it, have them sign it. Get your clipboard, check on the corner, fill it out right in front of them. Here goes your check. All right, boom, it's over. That way, when you show up for your audit like I did, Mr. Haskins, can I see your 1099s? Boo, 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 boo. I have a folder thick full of 1099s that I've given to people over the years. I don't even write a check unless you give me a W-9, right? W-9, the same thing as 1099. All right, so the last thing the IRS was challenging me on or wanted to verify was my mortgage interest. Mortgage interest. Now, a lot of times being a real estate investor, we have some creative financing going on with subject to, lease options, all craziness, right? Especially with subject to. And subject to is where we come in and we take over the mortgage payment from the homeowner. That means that at the end of the year, when the lender sends out a 1098 saying that, listen, this is the person that's supposed to be paying the interest, it's not in our name, right? So keep this in mind. Pay attention here, Roundup. Please pay attention. That mortgage interest is going to be printed or reported to the IRS in your seller's name, right? So it's not in your name. So what are you doing? You're going to walk into the agent and tell them, I wrote off $50,000 in interest this year. Well, they're going to look at you like you're crazy because they have the statements from the lenders in the seller's name, not in your name, right? So let's look here. Schedule E, mortgage and interest expenses. They want a verification of the debt, loan papers, promissory notes, proof of interest expenses. Proof interest expenses were incurred in the taxable year. Payment books for installment purchases or purchase contracts and canceled checks, receipts, or other evidence of payments made. So obviously we have canceled checks we can give them going straight to the mortgage company if we took over a house subject to. See, we have subject to properties, so that mortgage interest doesn't come in Kris Haskins' name or my social security number, right? It's reported to my seller's social security number. I'm like a ghost on subject to houses. So you got to prove this stuff. How does the IRS know? How do they know that you get to deduct that interest? Well, you got to prove you own the property. You got to prove you own that property. So I'm talking to the agent. I'm like, well, we wrote off all that interest because I own the house. And you know where I'm going with this. We don't own it in our names, right? We don't own the properties in our names. So what happens then? The IRS, they go to the city assessor's office or right to the website. They type up 123 Easy Street. They say, well, Mr. Haskins, this property is owned by 123 Trust. It's not in your name. How are you deducting interest on a property that you don't own? So we have the burden, proof of ownership. We got to prove we own the properties. And this is where it gets real sticky. Please pay attention here. The IRS wants to verify that you own a property because you can't deduct the interest unless you own it, right? You have to be the owner, and you can't depreciate it unless you own it, right? They want to make sure you're owning it. So you're going to have to, if you're buying houses like we do, not in our name, not in our LLC's name, in a trust, you're going to have to bring your land trust to the auditor. You got to show it to him. Well, Miss Auditor, here's my trust. Boom, boom, boom. Here's the last page showing that I'm the beneficiary. And it's over. It's over. So that was the first time that I actually had to prove that I was the owner of a property. because I wanted to deduct that interest. She was like, why are you claiming this interest when you don't even own it? Well, you're right, I don't own it. I just control the trust, right? So you got to be ready at times. You got to be ready at times to go up to bat. Go up to bat. Step up for what you believe. Step up for all this training that you're getting here. And you know, sometimes I get nervous. I get on my high horse and I say, you know what? I'm teaching this stuff. I know what I'm doing. I'm a big bad investor. But when you're going up against the IRS, you gotta at least second guess what you're doing. So I want you to know that this stuff does stand up to the IRS, y'all. They will give you what you need. They'll give you what you're due, mortgage interest deduction and depreciation, as long as you can prove you own that trust, right? And we can do that with our land trust agreement. Now, if you don't have your land trust agreement, it's in the video description. If you want to download mine, it's right below. I'm thankful for you supporting my channel as we just passed 80,000 subscribers. Once again, we got 1 million minutes watched last month roundup. Happy Memorial Day to you. Subscribe to the channel. I hope you enjoyed this one day off with your family. And like this content, share with any other investors that are thinking about getting in the real estate business, or any other business owners that are trying to get an understanding of what an IRS audit looks like. We went over those documents. I hope you don't get audited. It's very stressful. I'll see you on the next video. Peace.